Concerns about the global economy. Now, investors ran for the hills on Friday, particularly after the European Central Bank slashed its growth and inflation forecasts. Now, the OECD cut its global estimates, and China also managed to announce a plunge in exports and imports. A little bit of sensitivity and tentativeness across the board. Positive start to proceedings. Nikkei rising 0.5%, 21,125. Or the Hang Seng in Hong Kong moved 1% to the good, 28,503 points. The Shanghai Composite, the biggest mover today, almost 2% higher there, 3,026 points. Wall Street's main indices fell for what was a fifth straight session on Friday and posted their biggest weekly decline. That's since the market tumbled in the end of 2018 as a weak U.S. jobs report ignited more concerns about the global economy. Now, the Dow Jones Industrial managed to tick lower, dipping to 25,450 points. The S&P 500 losing 0.2%, hitting 2,743 points. The Nasdaq Composite was also down by a similar mark, 7,408 points. It's a positive start to today's trading, however, on the JSE, despite the negativity from last week. Of course, with Asia also getting higher this morning, that has clearly filtered through into South Africa's market. Now, the likes of the financials, however, not doing so well. The banking stocks feeling a little bit hammered. Let's consider as well that ABSA released earnings today. So too did the Old Mutual. We'll get into those numbers in just a bit, but for now, here are the markets. We always get to him when we need the brightest of commentary. Ladies and gentlemen, Bright Khumalo from Vestact Asset Management. They're joining us from the JSE. Good afternoon to you, but around 0.2% to the good for today. It's a slightly positive start to it, despite the bad look at the earnings out of the financial counters.
Yes, it's not looking very well for the financials there, Arabile. It is what it is, I guess. I mean, you looked at last week, we saw numbers from Standard Bank, Nedbank, all of them basically making close to 2% in terms of earnings if you exclude their African operations.
Yeah.
Well, ABSA today doesn't really have, that much in terms of African operations. So that was the final number, 2%. That's what it's up by. But management is, moving focus towards increased market share, in the retail space. For me, this is not exciting because they lost market share from the year 2002 to today. So their base, when it comes to that, is very low. So it doesn't excite me that much as compared to something like a Standard Bank or in a Nedbank when they increase their market share. Yeah.
Would you say that the change is perhaps incomplete for now, then, if you were to consider the fact that they're now changing leadership? And yes, they had the whole repositioning and the rebranding with the letting go of Barclays. Do you think it's an incomplete restart, shall we say, for ABSA?
I don't know, man. There's too many moving parts there. We'll have to see all of the costs, come down to the balance sheet to see how much exactly was, that breakup cost the company.
Yeah.
And the change of management, I guess that was definitely needed for a company to grow. It needs to show that, they mean good. These are the new faces, and they're serious about growth, and shareholders need to feel comfortable going forward in investing in this company, that they're actually going to do some tectonic changes there. But the unfortunate news is that there's a lot of banks in the sandbox. We've got Bank Zero that's coming up, which is going to eat their lunch. We've got Discovery Bank, which is going to go into the more higher LSM in terms of clients, and you've got Time Bank, which is competing directly with the likes of Capitec and ABSA. So competition is great for the consumer, it's great for the customers, but it's very bad for the companies that are already there.
Yeah, the market clearly not liking what's happened thus far with ABSA. But here's one that looks to be going into the transactional banking space, and we're not 100% sure. They haven't concretized it yet. But Old Mutual coming out with a set of earnings today. A little disappointing from you?
Yes, Old Mutual's, fortunes basically lie in the insurance side of things, how much business they write there, and on the investing side of things, depending on how the South African markets performs. But they basically saying last year the markets were down 14%. That's down with their earnings, which were down about 11%. So not looking good on that side. It's very hard. It's a very competitive market when it comes to new business, writing new business there. So that's reflected in the numbers. But to distract our attention from, how bad the numbers are, they told us they're going to be buying back some shares to the tune of 2 billion rands. The one thing that excites me more than dividends is obviously share buybacks. But I don't think this one is that exciting. It's a non-event. I mean, it's 2 billion rands. These guys are sitting on cash of about 32 billion rands. Depending on where you draw the line, it's about 1.8% to 2% of the market capitalization of the actual business. Yeah. If they want my attention, they must use half of that cash amount to buy back shares. That'll raise my eyebrows, and I'll be more interested.
What else can they do, though? Because it doesn't feel like they've got too much on their plate. It doesn't seem like they've got anything interesting sort of happening. And, with the market going down this year, they'll hope that the market spruces up. Are they just going to sit there and wait for things to fall on their lap?
Well, the economy still needs to do its part. I mean, these guys, these are well-run businesses, altogether, the financial services businesses, not just Old Mutual. But to come back to Old Mutual directly, they still have that nice stake in Nedbank, but Nedbank is not shooting the lights out either. It's ETI under that stable that's doing exceptionally well. Yeah. By the way, which was a drag on earnings, since 2014 until recently, when it contributed about 396 million rands into Nedbank's total overall numbers. But they've also taken that amount down, that stake down, and actually unbundled it to shareholders. That was a good move. It made me happy and our clients happy. But we want more, like you're saying. So, and is it the right environment to be going around and buying businesses? I don't know.
Sure. Tough one indeed.
As long as valuations still remain high, it wouldn't be good. To do something like that.
Let's quickly chat about AVI. They come out with a set of earnings as well. Any excitement out of them?
Nothing exciting. Their footwear division and their clothing brands not doing well. I don't remember the last time I went to Spitz. I don't remember going to Spitz in the first place. So that makes a lot of sense why those earnings are down 9.2% there. But here is what happened to the fast-moving consumer goods companies, or the old-fashioned companies. They used to actually have a monopoly on advertising. But the problem is social media has disrupted that industry, and they no longer, even though they still have the rands to invest a lot into marketing, but the problem is a guy like me could just come up with a new brand called Bright Clothing or whatever and advertise it only on YouTube and other social media platforms and still be a good competitor to these businesses. We've seen Dollar Shave Club coming out doing the exact same thing. In a space of 3 years, the company was worth over $1 billion and when it was bought by Unilever. And that guy, his first advertisement was 1 minute 26 seconds, basically saying our razors are flipping awesome. That's all he was saying. And I can promise you that his budget was much lesser than Unilever's or anyone who was in the razor business at the time. Yeah. And this is the times that we are in. We're seeing companies like Estee Lauder basically lowering their marketing budget significantly and taking most of it, basically finding these influencers online and saying, this is how we're going to sell our makeup now, because social media is moving this direction and that's where marketing is going and that's what we're going to do. Yeah. And if these companies aren't adapting to that change, unfortunately, we'll see more and more of that being taken by the small guy like you and I, Arabia.
Bright, I'm going to take you up on those Bright brands and perhaps we can get it going. Who knows, it might be listed one day, we might get it going. But this sounds like an awesome idea. Bright, appreciate your time. But Bright Khumalo there, portfolio manager at Vestact Asset Management. Of course, the picture there is with regards to earnings, and that earnings picture out of Old Mutual, ABSA, and of course AVI has been quite interesting. We do chat to the CEO, the interim CEO, Renee van Wyk, and the Chief Financial Director of ABSA right after the short break. So do stay tuned as we continue with our business news.